Hello everyone, welcome back to the channel. Today I'm going to be breaking down two trades on gold, two buys on gold that I took yesterday. Today's Saturday, the market is closed, but I took these two trades yesterday, and I'm going to be breaking them down and going through them. I'm going to start from the daily time frame, and then I'm going to analyze the pair from the daily all the way down to the 15-minute, which is where I entered, which is actually rare. Normally I enter on the 1 minute or the 5 minute, so I can get those sniper entries and small stop losses. However, this wasn't necessary for this trade. I just entered off the 30-minute and I was able to get a good entry even off the 30-minute. So yeah, now that's been said, let me just delete everything off the chart and start from the daily time frame. On the daily time frame for gold, I noticed a couple things. I noticed that we had this order block candle right here. If I just grey it out for us right here, now the market had tested and that we saw initial reaction from. So we saw the market come up, didn't break structure, which was actually a deal breaker for me. I didn't take this trade because of that, and then return, come back down, and then we saw reaction. I didn't take this trade because of the fact that we didn't have this break structure to the upside. If we had done, then it would have been amazing, because then we would have equal highs here be taken out, so both sides of the market would have been taken out. Here, the people that are buying from this level of support would have been taken out of the trade and hit stop loss, and then we would have had people that were looking to catch a breakout be taken out on both sides of the market. We didn't quite have that happen, so I didn't enter the buy from this point. That doesn't mean that it's not useless, because we could just still use that and then look for potential re-entries on lower time frames. And then on the 2-hour time frame, so I went straight down to the 2-hour time frame. What I did was I got my Fibonacci and I drew the Fibonacci for this impulse, and I noticed that the market was testing the 0.618 level, which is a good zone that we look for when we are looking for potential continuations to the impulse upwards, right? So we had this bullish bias on the higher time frames, the daily time frame, and then now we're seeing the market test the 0.618 line. That didn't tell me much. That was just an indicator that the market we might see some reaction. All this told me was that, okay, maybe go and look for a setup, because the setup may be available for a potential buy from this point, and there was. So what I did was I went down to the 30-minute time frame. On the 30-minute time frame, first let me just get rid of this little Fibonacci right here for us. On the 30-minute time frame, I noticed that we had this order block candle right here that broke through structure on both sides of the market. If I just zoom in, it's very small from the buy side of the market. So we had this little area of support formed by this low here that the market broke through, and then we had countless breaks of structure to the upside that the market continued to do. And then we saw the market come back to that level. So the reason why this place right here was interesting was because it was a 0.618 level of an impulse from a daily order block, so that's the bias, and then also we had this order block candle that we might see potential reaction to, right? So then what I did was I drew in, let me just zoom in for us here, this order block candle. What I did was I drew in the open of that Fibonacci. So if I just draw in that open, and then I just continued that line. Let me just reset this chart. Continued that line to the present market, and I got a sniper entry, a beautiful entry right here. And then stop losses are very simple, just below this low right here. So stop losses go there, and targets went here for me. I didn't want to keep this trade open over the weekend. So I just targeted here, and I was happy with the quick 5% on my account. I did actually take these trades and I did screenshot them. So here they are. This was screenshot on Friday. You can see the date and time, February the 12th at 8:30 a.m. You can see the market. I didn't quite draw it from the open of the candle from here. I drew it on the most extreme wick upwards, which is probably a mistake on my end. I probably should have just done it from the open, and I would have got a better entry. This is that same entry. So look. 1812.858, 1812.858, an hour later basically, and then you can see what the market did afterwards. So if we go down to the 30-minute time frame, which is what I was on just now, go back to the 30-minute, you can see where the market impulsed all the way up, and then I got a re-entry. So if you go onto the Discord and I just get that picture up, give me a second. Don't know if you can see this because I made it so it can only record one tab. Okay, here we are. This is the picture of the trade, of the re-entry that I got. I took this picture after the fact, after it had already happened, so it's not as believable as these two, but I did take these trades. You're gonna have to trust me, and I'm gonna go through that right now. So if you go down to the 5-minute time frame, if it wants to. Okay, and I just get rid of this little buy that I had drawn in. If I draw in the Fibonacci for the move that broke structure to the upside, so this move here, if I just grey out on for us 1 second, this move here broke structure to the upside and tapped into liquidity. So we had this structure be made, and this is all accumulating liquidity above here. So we have liquidity, a lot of liquidity sitting above this area of resistance. Then the market broke through that area through this grayed out zone. So I drew in that Fibonacci, and I noticed that we were in that zone at this 0.786, right? Then what I noticed was we had an order block candle sitting right here before that break of structure, right? So if I just draw it in same as before from the open of that candle, you could have got a beautiful entry. Look at this entry. Look at that. The reason why I took this trade is because I was a bit salty that I couldn't keep my trade open for too long, because I ran the risk of it having to keep open over the weekend. I didn't want to do that, even though it wasn't anywhere near close. It was 3:40 p.m. that this thing had happened. But I'm happy with my profits, because even if I had kept it open, it wouldn't have ever come back to the place I had closed my trade and took my profits from. But yeah, it was a very simple setup. This is going to continue going upwards, so gold is going to continue going upwards. Your targets for this trade, if you left it open, could have been huge. At a minimum, you could have targeted. So if I just, you could have targeted up here at a minimum for these equal highs, and then maybe even all the way up here to fill this imbalance, and then continue going upwards. But yeah, very simple setup. Just literally go to the daily time frame, look for your higher time frame bias, go down to the 30-minute and execute. You'll notice that the market, the forex market move is very fractal. It's very fractal in nature. Same thing that you'll find here: break of structure to the downside, followed by a move up that didn't quite break structure. Market returns to the order block, continues going upwards. That's the daily. Now, if you go down to the 30-minute, very simple. A very simple similar thing happened. Move up. This time did break structure, which is the reason why I actually took the trade. Comes down to the order block, and then we enter our buy. It's a very fractal market, and it was a very simple setup. You can see that I actually did take this trade. But yeah, it was a very simple setup, very simple trade. So yeah, if you want to be notified when I post more breakdowns like this, make sure you like, subscribe, all of that. But yeah, that's about it. Thank you for watching, and I'll see you in the next video. Bye.